Focusing on the markets now, last week JP Morgan made an announcement that it will be removing Nigeria bonds from its GBI EM by the end of October, and that sent the markets into frenzy. Joining me now to talk about this numbers from last week is Olawale Olusi. He's an investment analyst with AfriInvestor. Good morning to you, Olawale.
Good morning, Ari.
So let's talk about those numbers. Looking at data that came from your, most of the analysis from AfriInvest actually showed that investors are really staying cautious at this time.
Yeah, investors are really staying cautious, but what we noticed last week was that prior to the announcement from JP Morgan, the equities market, for instance, was rather bullish for the first 2 trading days of the week. Activities in the fixed income market were generally stable, but with the announcement on Wednesday, we saw a swift, what we refer to as a knee-jerk reaction to the news flow. However, in the fixed income market, we noticed that as against expectation for a sell-off, the market gyrated a bit earlier in the day, but reverted to stability, and it was broadly bullish for the rest of the week. And the same trend was also noticed in the equities market, where the market recorded improvement on Thursday and a positive gain on Friday.
But we saw a bit of contraction in the bonds market. We saw average yield contracting about 17 basis points to close at 15.5%. And investors are saying that there's going to continue to be muted reaction from offshore participants. How much effect is this going to have on the market, at least for this week?
Oh, okay. Well, if we look at the weighting of Nigeria in the JP Morgan Emerging Market Bond Index, Nigeria has 1.5% weighting. And once Nigeria is fully phased out of the index, we're expecting 1.5% to amount to about 2.8 billion naira to be to go out of the Nigerian market. However, from what we've seen last week, we think there's an increased domestic participation in that segment of the market. So another issue there is average yield in the same bond market is actually very attractive at the moment. So yes, we should expect less participation from foreign investors, but we are hoping that domestic participation should cover up for that.
When you say domestic participation, we're expecting the Debt Management Office to hold a bond auction this week on the 16th of this week, of 16th of this month. I beg your pardon. How much effect is this going to have on the market?
Well, the fixed income market generally was largely liquid last week, so assuming that the market is probably strategizing ahead of the bond auction that should come on the 16th of this month, like you said. So we expect increased participation, broadly driven by the fact that yield in the environment is really attractive. So we should see a reasonable participation in the bond market, most especially based on what has been going on since last week.
So are we also expecting to see so much pessimism, if you'd like, in the Treasury bill segment?
Well, that was the expectation initially, but what we've seen since last week does not suggest that. But going forward, we expect the market to be likely calm, given all the events that is happening in the global to domestic economy.
Largely calm. Tomorrow is September 15th, and I'm sure you remember it's supposed to be the day when effectively the TSA comes into limelight, or comes into play. That's the word. How much effect is this going to have on the fixed income segment of the market?
Well, the TSA is a big issue in the market at the moment, and banks are broadly they are basically scrambling for liquidity, and based on some of the news flow, we are getting the news flow that about 20,000 accounts are going to be phased out of commercial bank. So it's going to affect the commercial banking the deposit money bank. It's going to affect them definitely. But the data we saw as of June from the CBN is suggesting that the amount of federal government deposits with the deposit money bank amount to something around 3 to 5%. So private customers still account for majority of the deposits in the commercial bank at the moment, over 90%. So though it's going to have a short-term effect on their operation, but we expect this to stabilize with time. I mean, the Nigerian banking sector have shown resilience over time, and we expect them to stand up to the event that is unfolding in the economy at the moment, as they've always done.
Well, Alawale, don't you think that this will also heighten the tension that we've seen at the equities market, especially with the banking stocks?
Well, the information about the full implementation of the TSA is not new in the equities market at the moment. I expect if investors will react, they probably have factored in that information into their transactions. But investors will always react in the interim, but they will always adjust. Like, I mean, the bigger news of the JP Morgan that came in last week resulted in about 3% decline in the market on Wednesday, but the market stabilized as of Friday. So we expect a similitude of something like that to happen if it's going to be up to that at all.
So do you expect that the market, that's the equities market now, and you expect that the equities market should start the week on a positive note? We saw the market finishing at 0.60%. That's the all-share index now. Do you expect to see that positivity continue today?
Well, there's a huge likelihood that the market will close up as well today, going back by what happened on Friday. And of course, some of the news flow that is surrounding the announcement of some of the cabinet members of the Buhari administration is expected to come in this month. So we think prices in the equities market is still quite attractive, and investors have been, positioning ahead of some positive news flow, most especially from the government. But given some of the gains that we've recorded, there's a likelihood that there will be some profit taking here and there, but we think the market will still continue to trend upwards.
Well, thank you so much, Olawale Olusi, for joining me on the program this morning and sharing your thoughts with us.
Thank you very much, Harry, for having me.
Olawale Olusi is an investment analyst with AfriInvest, joins me to share his thoughts on what to expect from the markets this week. He's quite optimistic that the markets, the Nigerian equities market that is, will continue to maintain a positive streak. We saw it end at last week. The all-share index finished 0.60% higher at 29,689.08. Of course, the market is already set in continuous trade. We'll keep our eye on those numbers. And another thing we'll be keeping our eye on is the two-day Powering Africa Nigeria meeting going on in the Federal Capital Territory, Abuja. But that's the program for today. Many thanks for spending time with us. I'm Harriet Agbenyi. Bye-bye.